One of the most common questions I get asked in real estate is, what is the market doing? Or what do you think the market is going to do? And instead of rambling on about, oh, the market's going to do this and speculating here and there, I wanted to make this short video just to recap 2023, give a short 2024 real estate market outlook, and then give you a few tips for this coming year that can almost guarantee you success in the real estate market as long as you're careful. So let's look at 2023. Well, the first thing people generally care about is price, and they ask about how are home prices. Throughout 2023, prices actually remained relatively stable nationally, raising anywhere from 1 to 3%. And as we look at that, that's really not the whole picture. A lot of us know the real estate market this year was fairly volatile, and we saw some major fluctuations in interest rate causing affordability issues for home buyers. For sellers or existing home owners who had a house that they bought in 2020, 2021, before that, and refinanced into a low mortgage rate, they just kind of stayed put and didn't have too much turbulence in their um, real estate partakings, let's say. And we also saw that because these interest rates rose so quickly in the previous years, the demand dropped dramatically from its peak in 2021. And supply is also falling because, like I said, those homeowners are kind of staying put. They have these low interest rates and they don't necessarily want or need to move. And they don't want to increase their monthly payment by a rather significant amount. And because of this, a statistic is that about 70% of sellers actually buy after selling their home. So if these sellers aren't selling, they're not also buying after that. So we saw a huge volume decrease in the number of homes sold this year nationally. So now let's talk real quick about 2024. There's a few factors that I want to mention that are going to affect the way that the real estate market in 2024 plays out. Number one is affordability. And there's three factors to affordability. There's the home price, the income of the potential borrower, and then just what rates are doing. And one thing we need to look at is, well, if prices are staying relatively stable, well, income, unemployment is still at near record lows. It's still doing good, but rates are up. So affordability is still at one of its lowest points since 1984. And everyone's waiting for rates to go down. Well, if rates go down, it is likely that prices will come up. But rates coming down could also signal a worse economy. It's kind of a trade-off at the end of the day. Yes, we do want rates to come down. We do want these home buyers to have a more affordable housing product, but the economy slowing down isn't necessarily always good for everyone either. So one thing we're seeing right now in affordability is that it takes about 38.6% of the average or of the median income of the Americans to buy the median home. And affordable, according to economists, is about 30%. So we see about an 8.6% difference there, and that can really hurt the home buyer and slow down our real estate market. Fannie Mae, one of the large economists in the real estate sector, surveyed people, and only 16% said that it's a good time to buy. Whereas previously everyone was focused on price, what they found is that people were actually saying rates were the reason they didn't want to buy, not price. People have become acclimated to our current prices, but the interest rates make it not affordable currently. So number two, in 2024, if we do want volume to increase in the real estate sector, where will all the inventory come from? Because if these people are just sitting on their homes, why would they sell? There's a few factors here. You always have your people that are moving, whether it's for a job, death in the family, they want to relocate, they want to move on to somewhere else, their city's getting too expensive, whatever it may be, there's always going to be some sort of activity in the real estate market. But we're also seeing that personal consumption is still really high. And with the increased inflation and on goods and services, if this gets out of hand and unemployment creeps up, we could start seeing existing homeowners being forced to sell and get out of their homes, increasing the supply. So, like I mentioned before, if the economy does get worse, we could start seeing supply come on out of necessity, not necessarily out of them just wanting to sell. Number two here is multifamily. The multifamily market I keep an eye on as well because it can play a factor into residential real estate. The multifamily, we're talking 4 units and above, is starting to become oversupplied. And with increased supply, we can start to see rents decrease. We're already starting to see downward pressure on rents, and also just landlords and property managers are offering really great incentives to tenants right now. And if rents really go down, it may be, advantageous for a homeowner to look at renting instead of continuing to own their home. They don't have the maintenance costs, all of that, the taxes, a mortgage over their head, whatever it may be. These multifamily and lower rent prices may be enticing to them. Also, if the multifamily rents are decreasing or are offering all these incentives, that can put residential rent pressures in the market. So unit 1 to 4 units. Could make mom and pop investors actually end up selling their residential units that they're holding on to, maybe because they have a low rate, all of this. Maybe they're holding on to this unit, but if rent pressures are making it difficult to rent out, they may decide, you know what, maybe this isn't for me and move on, sell that home, increasing our supply. One other area we may see more supply in this year's market is with new builders. We've already seen that new home builders supply has started to increase. They usually account for about 10% of home sales, and or homes on market, and we're starting to see they're actually accounting for about 30% of homes on market. And they are also offering incentives looking to help buyers buy down their interest rates. So that new construction sector of real estate may be a place we can start to find more supply. This doesn't mean that we're overbuilt. We're actually still underbuilt in a lot of communities. And the high interest rates are still putting pressure on new build starts. Our last factor of 2024 that I want to mention, but we're not going to get too deep into it, are just geopolitical risks. This could increase speculation from buyers, sellers, investors, and it can increase volatility in our real estate markets as well. So it's something that you're going to want to keep a close eye on. So now let's talk about some tips to being successful in 2024. Number one is mind your timelines and your time horizon. Real estate over the long term, over the past 50 years, has actually only returned one negative year. And when adjusted for inflation, when you look at that, you can make a pretty decent bet that over the long term, real estate is going to appreciate in value and can be a good investment. But if you're looking for a 1 year or 2 year hold, right now may be a difficult market to do that in, unless you're being very, very strategic on your entry. Number two, watch your personal consumption and always have an emergency fund. Don't over leverage yourself when getting into a home, or even if you own a home currently. There are other options for you, and you may just need to consult with a real estate professional to make sure that your housing needs are met, but you're also keeping within your budget. Number three, perform regular maintenance on your home. If you already own a home, keep up on the maintenance. Try to make that place shine the best you can. Obviously, make it affordable for yourself. But by keeping up on the maintenance now, when you do go to sell your home, if it's this year, next year, or even down the road, by not deferring that maintenance, you're going to have a higher property value and can decrease the risk of maybe some major things happening with your home that could cost a lot more. Number four, if you are selling your home this year, go above and beyond with the marketing. Make sure you have a really good real estate agent. Make sure that they're promoting your property in the best light and make sure you price it correctly. You don't want to be chasing a falling market if the market does end up going that way. So pricing it correctly from the start can be a great way to make sure that your home sells in a timely manner. Number five, if you're a buyer, maybe look into new construction. Like I said, new home builders right now are offering some great incentives, including interest rate buy downs, maybe some closing cost assistance. And so it may just be something that you want to look into. They also generally will have a great builder's warranty that you can rely on just in case something does go wrong in the first few years. Could be an option for you. Number six, only buy what you can afford and look to hold for 8 to 10 years if needed. This kind of goes back into that timeline thing. Make sure that you're going to be able to afford the home. Don't over leverage yourself and be okay living there for 8 to 10 years. I've said this statistic before, but nearly two-thirds of people that bought in 2020 or 2021 were unhappy with their purchase because they negotiated with themselves on their needs in a home. You don't want, if you're going to live in the home and you're going to be there for 8 to 10 years, make sure number one, it's affordable. Number two, that it's really what you want and what you need. Number seven, watch for opportunity to buy into equity, force equity, or increase the home value of your home, and look for seller credits. So what this means is when you're looking at the market, looking at properties that are maybe sitting on the market a little longer, maybe a unique property that you can just do a little bit of work and increase the property value. Just looking for real opportunity within the market, especially while sellers are maybe a little more willing to negotiate because there is less demand. Lastly, this tip is for mainly investors that are willing to do out of state investing, but look into affordable markets. Affordable markets can create some resiliency around those prices because it can continue to have people migrating to those areas and then also just looking for cash flow. It's not a time to be pulling out of your pocket um, for your mortgage. It's time to start looking for some cash flow if you can, and being picky about your investments. Don't invest just to invest. Make sure you have a plan. And if you need help creating these plans, whether you're buying, selling, or investing, reach out to me. I have resources for you. Well, that's my 2023 and 2024 recap slash outlook. If you have any questions about this, have any comments, or just want to chat about your specific situation, do not hesitate to reach out. I'd be happy to help. Thanks so much. Bye bye.